Howdy, folks. It's Jeff Camarda. It's Monday, July 6th. Hope you all had a pleasant, peaceful, and safe 4th of July holiday weekend. Bit of a market update here. The market continues, again, not really punching a lot higher, but edging higher over the past 5 sessions or so, with NASDAQ hitting record highs. And non-U.S., particularly the Chinese market, Asian markets doing very well. And on the one hand, we're happy to have repositioned our asset allocation some time ago, the overall investment strategy for all of you to focus on these areas that we expect to do well in the COVID economy and technology, and our non-U.S. emphasis has been on Asia and China, expecting the China to recover first, as it appears that it has, since it was hit first. So we're happy to be there. But on the other hand, it's still difficult to reconcile this frothy market environment with just these horrible virus and economic numbers that are coming out. So we still expect a significant down leg, which is why we're straddling the fence with about 50% invested in areas that we expect to do well in COVID and appear to have done well so far, and about 50% more or less in cash. So some of you may wonder what our strategy is if the market, despite the drumbeat of bad news, continues to go higher. And that certainly is possible, though not very rational from a lot of perspectives, but it's possible. And a strategy for that, what would we do, of course, is wait until we see the inevitable correction. Things never go straight up. Eventually, stocks will get a good drubbing, whether it's a reconciliation or repricing to embrace the economic reality, or it simply is a pause, a price correction, as is inevitable, and look to deploy then. I think that I still think, I'm confident that if we wait and we're patient and we're disciplined, we will see a much better opportunity to redeploy as the market takes a breather and fear returns, as it inevitably does. But we're prepared either way. And just think back, it's very difficult to be out of the market when it's doing well. And it's very difficult to be in the market, the great times to buy, when it's not doing well. Humans are just not mentally configured, to act in their own best interest in market variable market pricing mechanisms like the stock market. But that's really when it pays off. So try to be patient. I know it's painful, it's difficult, it is. And remember that you are deployed in those areas that appear to be doing very, very well. We're just not fully deployed. We've kept a heap of dry powder in order to take advantage of better opportunities going forward that we envision. So anyway, that's it. If you have some questions or concerns, feel free to email me, j@camarda.com. And as a couple of you have, and I'll be very happy to share my thinking with you. And also remember, July 21st, Tuesday, we're going to have another web online class, part of our Wealth Masterclass series. This one will be due to popular demand, really, on taxes and retirement, having to navigate the most cost-effective and cash flow positive way through retirement by taking advantage of some best practices and ways to reduce tax. So please mark your calendars, tune in for that. That'll be 10 o'clock in the morning, and again at 6 o'clock in the afternoon. Let your friends and relatives know. And by gosh, if you missed or they missed our estate planning class, which we got really rave reviews on, the Tax Masters estate planning class, please let us know. We'll be happy to get you the link to that video. You can watch it as many times as you want. Please circulate it. There's a lot of really good information there. Okay, I've gone on, as usual, far too long for this gloomy Monday afternoon, weather-wise, if not market-wise. And until tomorrow, I thank you for watching. Bye-bye.